Hi, everybody. This is Seth Martin. Welcome to the Middle Class Investor. It's about 10 minutes to 11 on Saturday. And some of you that follow me regularly know that I've been away for the last few weeks. We had a holiday in there, and then there was just some other things going on with work and whatnot, so I haven't been in. Plus, the market really hasn't been doing that much. It really hasn't shown us anything different. It's been climbing higher. The S&P, you can barely see it here, but it's actually at new highs. The last 3 weeks ago hit a new high. 2 weeks ago it pulled back a little bit, and then this past week it rallied again, hit a new high. So we got new highs in the S&P. Now, we don't have new highs in the Dow Jones Industrial Average. That's the DJIA. Let's pull that. Whoop. Well, I thought I had, let's see, INDU. So it's in profit charts, it's INDU. So you can see it's almost at new highs. I mean, we got a new high right. We got the highs right there, and I mean the previous highs there. If you look at a daily chart, which we'll do right now, and zoom in, you can see there's a gap right here. In fact, let's just let's put a box there for that gap. I'd say at this point it's a good chance that gap is going to fill. Now, whether or not the Dow Jones Industrial Average makes new highs, I have no idea. There's no way to know. I will say this: it's rare for the market to retrace this much. It still could, but it's very rare for it to retrace this much and not make new highs. So, we'll look at Daenerys charting in a second. It's a little bit different than the Elliott Wave people. The Elliott Wave people are looking at there's a lot of internal measures. They're looking at certain advanced decline numbers at these peaks. And that's why they're looking at this being wave 1 down, a 2 up, and then a 3 down. But I mean, they could be wrong. I mean, it's very, very difficult to, as many of you know, to predict what the market's going to do. The only reason we can predict, if you want to call it predict, any kind of long term, what's looking to happen long term, is because we can see 5 waves. We know that we had a big correction. We had this important top in 1929 and a huge sell-off, right, that led to the Great Depression. And then I think it's pretty clear you can see 1, 2, 3, 4, and then this last wave up is 5. So to me, and this goes all the way back to 1929, so to me this is very clear evidence that we've had 5 waves. Anytime you have 5 waves, I mean, you look for at least, okay, a 4th wave retracement to continue the trend. And I think the 4th wave is probably just going to be wave A. So, A down to here, B up pretty big, maybe back up into this area around 17.5, and then C down into this, 2,500 area, somewhere around there. So yeah, we're predicting that we're going to reach a major top here at some point when the subwaves quit unfolding. But that's very different than trying to predict, because it's very easy to see this 5-wave move. In the shorter term charts, it's not as easy to see. If we look at a 5-year chart, or actually let's look at well, even here on the 5-wave chart, if this is, wave 1, and this is 2, and this is 3, I mean, 3 from here to here, if this is 1, 2, this could be just be 3, and this is 4, and then you have 5. So, it's really hard to tell, what's going on right here. Maybe this is 1, 2, 1, 2, I don't know, 3 up to here, and then 4, and this is 5. But this 4 right here is pretty small compared to this 2, or this 2 even. So, I don't know. It's like I said, it's very hard to predict. What we do know is that we're near the end, because we know this was a fourth wave move here. This was an ABC fourth wave move, and we know that we've had some sort of run up into this area, and we're up significantly since this 2016 low. So we know we're getting close. I think on the S&P, I was just doing some calculating, and like the limit to the upside should be, I want to say it was like 2966. So let's see where that is. 2966. Let's just put that line on here. 2966 would be right here. So let's say right. It's hard to zoom in on that 2960. Let's just say right there. So if we're not going to have some other pullback here into a different fourth wave, then the limit of this move should be limited to this 2966 area. But, I mean, again, we could pull back here first. Let's go back to the Dow. It's probably better. So if you're looking at the Dow, we could pull back into this area off this pivot low here, or even this pivot low here. Around, what is that? 24,900, and then rally again to make a new high. So we'll see. I'll show you Deneric's chart. He's got a pretty compelling wave count, so we'll take a look at that. Let's look at the 13-week Treasury. Let's take it off log so we can see. Back here when we said, we'd identified this 3.5 area as a real resistance, and we broke out here. And going back in 2016, we said, okay, the Fed's going to start raising. And of course they did. They started raising rates. And they've really been raising ever since, although they slowed down right in this area. And probably the Fed's going to keep raising rates because their analysis is the economy is doing really well. And it is doing pretty well. I mean, it's not doing as great as Donald Trump says, but it's doing pretty well. And so they think the raise in rates is due to economic growth. I don't know. I think the rise in rates, and I'm not necessarily talking about the 13-week Treasury. I'm talking more about the 10-year Treasury. I think the rise of rates has more to do with people wondering whether or not the U.S. debt is serviceable, and if so, at what interest rate level. And you got people kind of looking at the writing on the wall going, maybe it's not, so I'm going to go ahead and sell bonds, get out of the bond market. All back in here, you had people still climbing into the bond market. But really, back in 2016, we hit a low there in yields, and ever since then, people have been scaling out of the bond market. All right, let's look at some of these countries. Let's look at Germany. Germany made it into our decision point zone and has been selling off. Japan, it kind of went through our first decision point zone, then it went back to an older pivot and put this on. We can look at that real quick if you like. Let's look at the 10-year chart. And I drew, whoops, that's not even far enough back. That's amazing. It's a 20-year. So this yellow box here is off of this 2000 pivot, which goes way back, which was an important high because the swing low is the low before all this stuff. So this is the important low. You go back to the previous swing, draw a box off there, and you can see that Japan ran right into that decision point area and started selling off. So that tells me that Japan has likely topped. We'll see. I mean, this could just be a fourth wave down. United Kingdom, so the UK. You know, what's interesting about the UK is there's a lot going on about Brexit, and people freaking out that Brexit's going to, you know, just wreak all kinds of havoc in the British economy, and I just don't think that's likely. I think anytime the narrative is so one-sided like that, I think the opposite is probably closer to the truth. But what you do see here is you see kind of a 1, 2, 3, 4, and we might get a fifth wave. We might get another wave higher, and in the UK, somewhere above this pivot. So maybe up here somewhere, and then we should see the UK sell off if it's not selling off already. Let's look at. Let's switch over to the toss charts and look at. Let's look at gold. This is the gold chart. So again, gold looks poised. This is some sort of wave 1, and this is probably a wave 2 pullback. We're probably gonna have a good run up. If not this coming week, the following week we'll see some run up in gold, maybe up into this 1380 area. If you're looking to buy physical gold, this is a pretty good place to do it. Now the bigger picture again, I think I've talked about this, but the bigger, longer term picture in gold is some low below here. Let's see if I can pull it all. See, I really can't pull it up. 20 years. Yeah, it's just not coming all the way up. But you can see here that if gold pulls back into here and rallies up into here, there's an ABC, and of course we should expect a real hard rally back to this pivot low here. So, if you want to hold out, I think gold's going to bounce here and probably run up into this area. But if you want to hold out for a lower low, you might hold out for the 1050 level. But just recognize that that's going to come after all this, and then somewhere in all this big down move here. So, all right, let's look at silver. Silver looks real interesting to me. It had this huge run up into 2012, and then really the sell-off has just been 4s and 5s. Basically the trend kind of wearing itself out until you got a bounce here. So we're probably looking at some sort of A, B, C up into this 23.5 area, maybe a little higher, maybe into this 26.5 area. Then a pullback, and then another rally. So, I kind of expect silver to kind of move into this $33 range before it rolls over and goes lower. So, if you wanted to buy silver here, I think that's a good buy. As you can see, you zoom in, and then you'll be able to see. can see it's pretty darn low. Down here it's whoops, what is that? What's that number? Well, I can't get out of this mode. It's so frustrating. Okay, there we go. This low here in 2015 was around 1370. So we can see a rally here above this pivot high. So let me move this box over. So we see a rally up into this area. But I don't think gold is really going to pull back down into 13.5 until several years from now. So I wouldn't worry too much. I mean, gold certainly is a good price to trade here. All right, let's look at silver and gold. Let's look at oil. Again, oil is trying to make a little head and shoulders here. I would say that if we break below the neckline here, then let's see. Where are my drawings? Here we go. Drawing tools. Let's put the. Let's see. Maybe right. Yeah, maybe right through there. So if we get a break down below this, I don't know, you might look for oil. It's really hard to tell what's going on with oil right now. I mean, oil looks like to me it wants to go higher, but the volatility on oil is increased significantly recently. So it could be the oil's topped. It's not clear. And anytime there's a market that's not clear, you should just move on and go find another market to trade. Let's look at the euro. The euro, I think, finally we've got some sort of top in the euro. This was all an ABC up into here. This is clearly looks like a wave one down, and we're just trying to unfold some ABC that might take us into the 119 area on the euro US dollar. Let me open this up a little bit, make it a little bit more friendly. So I would look for the euro US dollar to move up into this area, and then roll over into wave two down here, and then a wave three to there, and then a wave 4 and 5 into here, and then up here for the euro US dollar. Right now you got people like Peter Schiff really talking about how the dollar's topped. I just don't think that's the case just yet. I think we've got pretty good ways to go before the dollar tops. I think we are headed eventually for some sort of dollar crisis, just because we're abusing the whole dollar standard worldwide, and I just think that can't persist forever. So, but I think we're going to have a strong dollar for at least a couple of years before the dollar rolls over. So, at least that's what the chart looks like. All right, what else do we have? That's really about it. Let me show you Deneric's chart, and you can see here, you have wave 3 happening back here in February 2018, and then immediate sell-off, and then the election of Donald Trump was, well, he doesn't show it on here, but it was down. It was back here somewhere, back below these numbers, around 23, 24, and Of course, you can see it ran way up and then sold way off and then chopped up again and then chopped back down. And, long story short, on the S&P 500, the Wilshire, the 5 we're looking for is this green 5. And you can kind of see his count here. It's pretty, it looks pretty, it looks pretty good actually if you think about it. I mean, if this is A, B, C, D, E triangle, here's 1, A, B, C, 2, and then here's another 1 of a lesser degree, 2, 3, 4, actually 4 is A, B, C down 4, 5 to complete wave 3 green, and then he's showing, we're going to have some sort of A, B, C down into here. Which would make sense. I mean, here we had a flat, an ABC flat, and so it would make sense that this would be a simple pullback. So if this is a simple pullback and we get a pullback into here, then we're looking for new highs in a large wave 5 to complete wave 5 of 5. So we got 5 of 5 of 5, and he only shows 3 degrees of trend here. So, this could go on until the election. Maybe the election is setting something up that nobody expects, like, I think it's just interesting the Democrats are so confident that the country hates Trump and that they think like they do, and that, people are just going to vote Republicans out of the House. If you look at this chart's telling you, at least it's telling me, that could be the Democrats could be setting up for a big loss coming November. And of course we're all going to lose, when the big sell-off comes. So anyway, that's something to look at, something to think about. For those of you who are trying to get back in and get some more winnings, you might wait and see if this rolls over next week or the week after and rolls down into kind of this wave 2 off of the wave 4. So let's see where that is. This is the Wilshire, so it's kind of hard to look at. Let's look at the Dow. No, let's look at the S&P. So if you look at the S&P, what they're looking at, let me go to a daily. Let's see, daily. There's daily. Sorry about all the jumping around. So you can see the A, B, C, D, E, and here's wave 1, A, B, C 2, and then 1, 2, 3, A, B, C 4, and then, 1, 2, 3, 4, and then we're going to have a 5. Or it could pull back first into this area. So maybe we get a pullback into, the top of this support area. So, whoops. So ABC pull back into here before we rally again higher. Anyway, another way to look at it is if you want to look at wave 2 here, a lot of times wave 2 and wave 4 are connected. So if you take a line, I haven't done this previously, so this may not work out. But if you take this wave 2 line here and you connect it here to this wave 4, and then you go over like this to this top of wave 3, something like, something like, well, I'm not going to be able to draw it. I'm going to go wrap up the deal. I'm on battery and I'm running low. So let me shut down for today and we'll talk next week. Thanks everybody for coming in. We'll talk to you later. Bye-bye.